Guys, welcome. Sorry I could not post videos from few days. I was tied up with something. So the last video was posted on uh, analysis of 25th Feb. So let us start on next week, this Thursday, 26th, 27th Feb. I think Wednesday, yeah, Wednesday was a holiday. So as we usually do, let's mark the low and high of previous day. This is yeah, this is PDL and PDH. On 27th, market opened in actually no man's land because this was PDL and this is PDH, sorry, PDHL and PDH and CPR. So market opened somewhere here, went up to this side, and there was a selling pressure from here, it came down. So there is no entry on the first candle. Second candle broke the first candle low, but it closed in the CPR and 20 EMA both. And the third candle closed the EMA, but it still could not break the CPR, so there is no entry here. Fourth candle could not reverse. If this candle would have closed above this 20 EMA and above CPR, it was a long entry here. So there is no long entry. And that is how I always say, guys, wait till the candle close. Like maybe around 4 minutes of this candle, it was showing here and it gives the impression that it is going to close. But at the fifth minute, like 4 minutes 55 seconds something, it is closing here below this 20 EMA. So there is no entry. Then this candle, 935 candle, it broke the CPR, it broke 20 EMA. So this is a short entry. Now this is a short entry but with a poor risk reward, because if you enter here, your stop loss has to be above the 20 EMA or above the CPR or above this candle. Now if this, sometimes if this big candle is there and if you are convinced that to go in your direction, then you do position sizing, take some few small lots, and when the market gives retracement happened on this candle, this is 945 candle, that time you can put your remaining lots and then re-enter here. So this was a good entry, and then twice the CPR or days low was your target. So somewhere here you should get out from this candle. And if you miss this entry, again this is the another entry. uh, it it is like a retracement, you can call it, because it tried to go near stop loss but again gave a proper. See, when this 20 MA is broken and then it is not, it's broken this side twice, then third time you don't have to see, that will, the false breakout thing and the breakout thing will be void. After this 20 MA is of no use, because twice it has, you know, it has broken this side and then it gave a false breakout. So and on this candle there is no false breakout. As long as your first trade stop loss or target doesn't hit, there is no false breakout on this. And again I told you, one two three, third three candles, and after some few like days or few months of this understanding all this, you will know which is breakout, which is, because while breakout also the candle has to be proper. If this is without wicks and proper body, then okay, we can consider, and not these two candles back to back. So this was second entry, that's it. There was no other trade, I don't think. If you miss here, again you have a trade on this or you want to continue this trade itself, you don't want to exit and take your full 1:2 or uh, your PDL, then okay, you can wait and then you will achieve your target here. So that's it, let's go next day. This was PDL, and now the PDH will change. PDH is here. Okay, so this day Yeah, this is Friday, 28th Feb. It was a big, huge gap down day. You see where the market opened. Market opened gap down on this here. Tried to go up, but from this pivot it came down drastically. Okay, in such cases, what people usually do after 1 minute or after, okay, this high is marked after 1 minute candle, and maybe this there will be some low, so people will go short, and then they will keep stop loss here because it is gap down and it's going in the same direction. But since I follow 5 minutes candle, I will wait this candle to complete. Now there are two things can happen on this candle. This is a big candle. There is no entry on the big candle. This is my strategy. I generally don't take entry on the big candle, because if you want to take entry here, where is your stop loss? Stop loss should always be protected. Either candle stop, or this one, or even this pivot, or 20 EMA, or this pivot above the candle. It's big stop loss. So always avoid to take entry on the big candle. There is no short entry on this. Then if this second candle would have been green, I would have gone long. But this candle is not green and third candle is green. So it tried to sustain here, but then this candle broke this level. So there is entry on this candle, go short, stop loss above this first candle low, or uh, candles high. That is your stop loss, and twice the stop loss is your target. Or you can trail this stop loss, like, if as long as this market is below this 20 EMA, you can go, and you can then take this one up to here, and here your stop loss will hit on this point. So you can trail from this level to this somewhere. Okay, or you want to take another entry, take a 20 EMA retracement entry on this point. But usually with the 20 EMA retracement, there has to be some pivot or some resistance on top to make it high probability trade. But still it worked, because I told you, always look for the previous candle. If this is green and this is red, and at the 20 EMA, high probability. So with experience you will understand this. So this was like a big gap down and bearish day in the same direction. Not much. Then this gap is formed here now, and this becomes a supply zone also. So it will be a strong resistance. So this is PDH now, and what's the PDL? And this is PDL. Okay. Now after every trending day, there will be white CPR. White CPR. So what happened between this PDL and PDH? This white CPR, the market opened inside the CPR. Inside CPR, first candle could not break the CPR on top. This candle has reversed it, but still inside CPR, so no entry. Third candle, okay, it was like, it is not a convincing breakout from the CPR. So where is the entry, guys? Entry is when these candles were try to sustain this level, and this candle 940 candle broke it. It did not only break the CPR, it broke the VIX and it broke the 20 EMA, and it's a convincing breakout. Convincing breakout is always like this. This is into two parts of the candle, like proper, not much VIX, and the body is 50-50. This is a proper breakout. So you should go short here. Keep your stop loss above the candle. Twice the stop loss is your target. So somewhere here is your target, and you are out. If you miss this entry, you can take the retracement entry here. And yeah, after this, now again, since it is C, uh, I want to this, like, just before some time I told you, once this is there, either stop loss or target should hit. But on the white CPR days, okay, narrow CPR, average CPR, it can be anything. Sometimes it's average CPR is range breakout day, fine, but not always range breakout day. but white CPR is always reversal or maximum time it is reversal or sideways day. I have rarely seen white CPR days a trending day. This is market, guys. Anything can happen. We have to respect market, but with experience I'm telling you, white CPR is majorly it is reversal or sideways day. So reversal where this candle cannot close properly, not a convincing breakout. This candle has given a proper breakout, false breakout, and you have to consider only once false breakout. Like this candles broke the 20 EMA downside. Now upward we have to see here. Okay, it is broken. Take your entry here. Stop loss below this pivot and twice the stop loss or CPR is your target. So that's it. For this day I don't see any other trade here. After that, then let us go next day. It was PDL here, then PDH. See, if you do intraday, you don't have to, and if you follow these candle patterns, you don't have to worry about what's happening in the market, what is the news, what will happen, because at the end of the day, you are out. Always trade MIS. MIS is intraday order. Don't carry forward your position. Never ever. Howsoever confident you are, don't carry your position to the next day. So that's how you'll get a sound sleep. Don't carry your tension or happiness or anxiety, whatever. The day it's over, that's the past. That's it. So PDL again, very narrow CPR, so you can neglect the CPR. It can be like anything. Now with this, if you see first candle was a doji candle, not convincing. You don't know what will happen. So once this first candle is formed, um, we can decide, like if the first candle high is broken, I have to go long. Like the second candle, I'll go long. Not just because the first candle high is broken. You see this PDL was broken, and this PDL is not only the PDL, it has some significance, because till this point of the time this is the new swing low. Okay, if you go to days low, daily time frame, you will see this is which day, 3rd March. 3rd March is this was the that time. So that's why this level is important, and once this level is broken, um, ideally it should be broken with the first candle, but if not, even the second candle, if it is broken, it's not on the every PDL. If it is broken with second candle or third candle is okay. Other PDLs, it has, there is a pattern, or we can go long only if the first candle breaks it. But since this PDL is a swing low, we can go long on any of the candle which breaks this PDL. Okay, so go long on this candle, keep the stop loss below the candle low. Okay, and this is called bald candle also. Bald candle means from this point it has gone up, but it has no wicks on downside. Like the buyers are so powerful here that it did not give even a small, small wicks. On top it can have a wicks, but this is a big candle. It's not a power candle, it's called bald candle. So keep your stop loss below this, and twice the stop loss is your target. I think target is not achieved, and it was a break even trade. So let's go next day. This was then PDL, and then yeah, today at least. So this is PDL. Now this is become the swing low. I told you PDL, not always the PDL. If the first candle breaks the PDL, that is your entry. But if the PDL has some other significance, like it is swing low or swing high, in PDH it will be swing high, but PDL it can be swing low. And with that swing low, if even second candle, third candle, or any candle of the day, when it opens gap down and breaks it, then that's your entry. So let us see today. Today, okay, we can remove this or we can keep this because this was a selling zone. Fine. PDL, PDH, And I'll tell you two, three things here how experience matters or how your analysis matters. What do you think? On the first candle, many of you, um, if you are watching my videos and all, you will predict that it's a low probability trade. It can reverse because it has closed on the pivot and it has small wicks on top and it's a big candle, low risk. Fine. But I'll tell you guys, this such kind of days will be very rare and you don't want to miss those. I know that even if you miss this opportunity, you'll find something else. But this is how you have to develop your experience. The first candle was the best candle to go long. I'll give you few reasons. The first and most important reason is this is the market is in downtrend and yesterday it gave a breakout from bottom, like from PDL it broke and it sustained in that level. So you can again imagine that yesterday's target also did not hit. So if somebody is continuing that trade, that will work today. It has to hit the target. Second is the first candle is taking support from 20 am and CPR. These two indicators or this whatever two parameters are the most important parameters of whatever my analysis I am doing from 6 years. Okay, and the first candle, it rarely happens. It takes the support from 20 MA and it is taking the support from CPR also. And moreover, CPR is not too wide. It can be average, it can be narrow, it can be too narrow, but it is not too wide. If it is too wide, I will not go long here. So first candle I will go long. I will neglect this pivot because there are two parameters which is giving me that confidence. And look how beautifully it is broken, almost from the center of the body, this PDH. And yesterday's trade is still on. So go long here, keep your stop loss below the candle or below this, and on the first candle only any experienced trader will say that it will be a trending day. And even if you want to be very confirm about this trade, what you can do, don't go for long on the first candle, wait till the first candle high is broken. Don't wait for this complete candle to form, just wait. As soon as you see that first candle high is getting broken somewhere here or somewhere, take a trade, keep your stop loss below the same candle, because you're not getting a discount price, you are not taking trade here. So stop loss will be below this candle. Okay, and twice the stop loss or you can trail the trade. Now if you go long here, put your stop loss below this CPR, you find I think maybe somewhere here twice the stop loss or here you will get out. Now second trade is on the trending day, you have to take a retracement trade, retracement on 20 MA. Now not always whenever market comes here in a trending day, it will be a 20 MA retracement. That is how you don't have to expect, you have to watch what happens here. This is not a convincing false breakout, neither this is convincing retracement, because this is not a proper candle which is taking, because after few days you will understand, you go for big breakouts or big retracement and see how the candle behaves there, and that picture should be correlated with this kind of thing whenever it happens. So at this point it was neither a breakout, false breakout, nor a proper retracement. So there is no further trade on the day. You on this candle it is broken properly, or even this candle is broken below 20 MA. But guys, always remember, never go against the trend. Trend was purely bullish today, and it it if it is a standalone day, like there was no previous backup, like yesterday was showing some strength and it closed above, and today it carried forward. So on such strong upward move day, no false breakout. Don't dare to go against the trend, although it follows in your pattern. This is a high probability, and if it happens somewhere here, okay, I can understand. But after moving, like, how many points from this point, you almost got 120, and then here it's 385. So it's almost like 250 points move. From there, even if it breaks 20 EMA, you have to see how it breaks. It was not a convincing false breakout. So, and even I'm not saying that it may not fall, it may give you a big return, but as a setup, never go against the trend. That's it, guys. I hope you are learning. i I did not do much on my previous 2 3 days, but today I took the trade. I had a profit of around 29,000 and 24,000, 29,000. I may I may put that in the thumbnail. Okay. Okay, that's it. Thank you. Bye bye. Take care.